Thursday once again. Let's take a look at some charts on legacy stuff for Brave New Coin. We'll start with the VIX, the VIX volatility index. The fear index continues to creep its way below the corona highs of 80 plus. Historically, if VIX is increasing, we're bearish crypto. So to continue to see the decline is definitely bullish and played a big part in the January rise of virtually everything. You know, it's funny, you look at all this DeFi stuff and think it's amazing, it's the next best thing since sliced bread, and then you zoom out and look at everything under the sun, which has mega mooned since January. So we'll see what happens when the tide goes out. But right now, it still looks like we are in risk-on conditions despite VIX historically holding above 15, which we don't see, and we haven't seen too often. If we continue to open up in the US and worldwide, VIX should begin to decline as the corona stuff goes by the wayside. We're still correlated. This is the 30-week rolling, still fairly correlated in a positive direction with DXY. We haven't been this highly positively correlated, since early 2020, and these high positive correlations don't usually hold. So it's definitely a mixed bag, because when we look at the Dixie, I'm concerned that this is headed for 96, which would be bearish for crypto. Almost assuredly, the dollar rolling correlations are coming off slightly, but still holding that massive negative correlation, which if we're in a risk-on environment, we shouldn't be correlated with gold. And if we're in a risk-off environment, we shouldn't be correlated with DXY. And we're kind of in between all of that. So the correlations are a bit of a mess, but what we are highly correlated with is SPX and NDX, NASDAQ, although that is declining slightly as both are kind of just sitting at highs. Both still look ready for a massive rollover, so the more we can drop this correlation over the next few weeks, the better, because I am highly concerned for both of those. And like I already said, the DXY, it's held this range since 2015, and it's hard to get bearish at support, but if we do break 88, 89, we probably are headed 86, 85, which would be mega bearish for the dollar and bullish for everything else. The issue is here we are oversold, bottoming out, potential slowly creeping inverted head and shoulders. We're not pushing lows still. We're not bleeding more on the weekly. So this may just be the range for the indefinite future, but if we do drop sub 89, then it's game on, certainly. Here's that candle today, broke 90.5. And again, we saw this falling wedge on low time frames, so it's tough to be super bearish on this, despite the moving averages obviously holding bearish. I just don't think this has enough in the tank to just continue its descent sub 88. Gold took a bit of a cooling period this week after rising for like 25 weeks in a row. Still, it's above the cloud, bearish TK cross on the weekly, a bunch of mixed signals. Probably doesn't get below 17, even though the cloud like 16.5. I don't think this is a short or long at the moment, but definitely something to watch in terms of crypto. Silver, though, I mean, we're seeing this across AMC, GME, everything. You get an ascending triangle post white coffee and accumulation, and the expectation is continued markup. So, you know, I've never been a silver bug in my life. I've never held silver in my life, but silver looks very strong here, consolidating at 27, banging on these highs, ready for 30 plus. You know, if we see inflation or something hit the US hard, then we could see flight to metals, and that may take all of 2021. It may take into 2022 to actually see this play out. This is the weekly chart, so this is incredibly slow, but gives you time to get positioned and take notice when it does break, because there's zero scenarios in which this is bearish for silver. SPX, on the other hand, just looks screaming. I say this for the past 15 weeks in a row, but it definitely needs to pull back pretty significantly. The cloud likes 36 or less, basically, and this TK cross is going to cross bearish, which may give you a chance to get out at the top. But it's hard to ignore that signal on the weekly, which historically has been a pretty good indicator at a momentum shift. NASDAQ looks very similar. And this weekly TK cross will probably happen before Q3 or at the beginning of Q3. So I wouldn't be surprised if we see some sort of significant drawdown there, which also brings crypto with it. GME, again, here's your ascending triangle. You know, this target is insane, but so was the AMC target. And it takes certain conditions to create things that we've created with these meme stocks. It's more than just Wall Street Bets and Robinhood. It requires the chart to look a certain way. You know, it required a year of accumulation in AMC's case before the ascending triangle, and post ascending triangle breakout, it took 5 months, right? Like, people are surprised this is happening, and it's definitely a once in a lifetime type of market movement that's embellished by hedge funds seeking out other hedge funds. Whale wars, basically, with Robinhood players getting a front row seat. But it took the chart to look like this. You know, we can't just mega moon continuously. You need periods of accumulation like this. So it's, you know, I didn't enter AMC like I should have a couple weeks ago. You can watch that video. I talked about this ascending triangle. It hit the 4618. Definitely not something you see every day, especially as quickly as it did. But AMC is setting up for, you know, AMC's 1618 is 550. Or sorry, GME's 1618 was 550. AMC's was 29 and it hit 75 or something ridiculous. So we'll see if there's enough short squeeze in the tank to get this to go that high. But based purely on technicals, it looks ready for a move up. Certainly, you know, even if you don't believe in the triangle, this is an Adam and Eve, very clearly, much like it was here for AMC. It's above the daily cloud again for the first time since it broke down. Plenty of technical rationale why that should go higher. BBBY, I think, was more just a product of rotation, although it's, again, had technical evidence for repeated falling wedges. It was above the weekly cloud already. You could argue just a series of markup phases. You know, it takes certain conditions to get what happened in sort of a perfect storm of the market accumulation mode on these being over and ready for a move anyway. And so you had that momentum on your side. Obviously, the expected move isn't as crazy as it occurred, but you know, that can happen. Meanwhile, Coinbase looks like trash still, continues to look like trash. I think it's going to need 6 months to a year to even figure out who's done selling or continues to be selling rather. Tons of volume at 226, 238, tons of volume at 333. For me, I'm just avoiding this until the chart looks better, right? Because it's just very clearly doesn't look like anything bullish. MSTR, which is comprised mainly of 80% BTC, really. No surprise that it also looks like an ascending triangle here at the bottom, much like ETH and BTC do. And I like 565, something like that. Basically the 200 period moving average on this time frame. You know, it doesn't matter what the time frame is, but whenever you see the 50 holding and then the 50 gets breached, the expectation is always it's going to turn down to some support. In this case, it's going to turn up to some resistance, which is somewhere around 600. You know, the dream is 800 plus, but we don't see that probably until we're above 64K again on BTC, if ever. So it's hard to be mega bull on MSTR. Now, if we turn down on crypto or this turns down, Sailor's in trouble, MSTR is in trouble, BTC's in even more trouble because then he's going to have to start selling. He's going to get liquidated at some point, right? He's not going to hold, or his board isn't going to let him hold indefinitely with the company holdings. So that's also something to keep in mind. And Tesla looks terrible as well. Looks ready for a bearish 5200 cross. Zero volume up here relative to sub 200. And my question is, when does Tesla start selling if they haven't already in their treasury? So that's something to watch out for. And if their stock starts free falling, when do they start shoring that up with the BTC treasury? Because it looks like the tech stocks, for the most part, their run is over. The run since Corona. Again, Square had its really 2-year accumulation period. You got that spring in March 2020, and now we're getting this bearish 5200 cross up here with a mess of a distribution looking top. Doesn't look bullish for Square. So there's definitely some isolated bullishness. Correlations are kind of all over the place. Ultimately, I want to see VIX sub 15. I want to see DXY sub 90. Everything else I care less about. But to see GME and AMC kind of explode to the degree that they have is definitely late cycle type stuff and concerning, much like the Doge clone BSC scams or sort of late cycle indicators for the crypto top. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool. You can send ETH or USDC or just watch what I'm doing. Everything's completely transparent. Allocations, trades, performance, AUM, all of it's done through DEXs, and you can get in and out whenever you want, should you want to participate or just see what I'm doing. The DeFi portfolio is blue chip. DeFi coins, you can see allocations again. You can see everything I'm doing there as well. So that's all here for this one. Like, dislike, comment, share, subscribe, and happy trading.